Hi, in this video I am going to explain how to make journal entry. So before that you need to have a basic idea about journal. So journal is a date-wise record of all the transactions with details of the accounts debited and credited and the amount of each transaction. See, journal is one of the book of original entry in which transactions are originally recorded in a chronological order, that is day-to-day order according to the principle of double entry system. Okay, so double entry system means in journal you need to have two lines. First line refer to debit and second line refer to credit. In journal, both debit and credit must be equal. This is called as double entry system. So journal is the original book of entry where we used to record all the transaction, whether it is 1 rupee transaction or 1 crore transaction, all the transactions should be properly recorded in the books of accounts is called as original entry, that is journal entry. So after making journal entry only, then you can go for ledger and trial balance and finally you can prepare the final account. So without journal entry, you cannot proceed any accounts. So journal is a prime entry. It is the original entry where you can find all the transactions. So all the transactions should be properly and systematically recorded in the books of account is called as journal. So in order to make proper journal entry in a systematic manner, you need to follow few steps. So I am going to explain 4 steps. With that, you can able to have a clear-cut idea about how to make journal entry. So the first step is identify the two accounts. I told you for journal you need to have two accounts. One account for debit and second account for credit. So first thing you need to identify what are the two accounts which involved in the particular transaction that you need to identify. And second one, the identified account should be classified as to real account or personal account or nominal account. So generally there are 3 accounts are there, real account, personal account and nominal account. So you need to identify the 2 accounts, that is for example if you take salary paid, or what is the entry for this transaction? Salary account to cash. 2 accounts are involved in the particular transaction. For that you have identified 2 accounts. One account is salary and another account is cash. And after identify the 2 accounts, you need to classify the 2 accounts. The particular first item is salary. Salary is related to real account or personal account or nominal account. Salary is expense. Expense means nominal account. So nominal account rule is debit all expenses and losses. So the first account is belong to nominal account and the second one is cash. Cash means real account. So when you pay salary, cash goes out. What is a real account rule? Debit what comes in, credit what goes out. So cash is a real account. So now we have identified the 2 accounts, and identified accounts are classified into nominal account and real account. Then find the rules of debit and credit. So nominal account rule is debit all expenses. Salary should be debited. And what is the real account rule? Debit what comes in and credit what goes out. So here when you pay salary, cash goes out. So credit the cash. So find out the rules of debit and credit for each and every account separately. And fourth, last step is identify which account is to be debited and which account is to be credited. I told you in this particular transaction 2 items are there, 2 accounts are there, salary account and cash account. And after finding the rules of debit and credit, finally you need to identify which account is to be debited, which account, salary account is to be debited, and which account is to be credited, cash to be credited. Why? Because when you pay salary, cash goes out. So according to the real account rule, debit what comes in, credit what goes out. So when you pay salary, cash goes out. So cash should be credited. Salary is the expense. Nominal account rule is debit all expenses. So salary should be debited. So these are the 4 simple steps. With the help of the 4 steps, you can able to make journal entry in a systematic manner. So let me explain the golden rule. So the first one is real account. So real account rule is debit what comes in, credit what goes out. So I have explained few examples for real account. So real account is all assets. For example, building, land, machinery, furniture, computer, all the fixed assets are real account. In the same way, goods. When you purchase goods, goods comes in. When you sell something, goods goes out. So goods also, in the form of goods also real account. And in the form of cash, cash in hand, cash at bank. When you make any payment, cash goes out. When you receive any income, for example, rent received. So when you receive rent, cash comes in, no? So all cash transactions are real account. So real account rule is debit what comes in. When you purchase any asset, for example, purchase of land and building. So when you purchase land and building, what comes in? Land and building comes in. So debit what comes in? Land and building comes in. So at the time of purchasing any asset, what goes out? Cash goes out. So credit what goes out? So land and building account it add to cash. So this is the entry. So according to real account, you can able to make journal entry with the help of real account. So real account is all assets in the form of cash or in the form of goods. Second one is personal account. So personal account rule is debit the receiver, credit the giver. Here the person is involving in the transaction. Personal account rule is that I have given some example for personal account. Owner's capital, that is a proprietor. At the time of starting up a business, proprietor need to invest some amount as a capital, no? So owner's capital also personal account. He is a person, no? So drawings means a proprietor withdraws some amount from business for his or her own or personal use is called drawings. Drawings can be in the form of cash or in the form of check or in the form of goods. If we withdraw any amount from business, the entry for the transaction is drawing account it out to cash. If we withdraw or if he takes any check from the business means entry for the transaction is drawings account it out to bank. If he takes some goods from the business means, goods means he purchased some goods for the business purpose, no? Out of that, the proprietor takes some goods for her personal purpose. Entry for the transaction is drawings account it out to purchase. Okay, then next one is debtors. Debtors means customer. Customer means the person one who receives benefit from the company without paying any money. In future they are going to make payment to company. Till such time they are called as debtors. Okay, they are due to the company. There also comes under personal account. Okay, the next one is creditor. Creditor means supplier. The person one who gives benefit to the company without receiving any money or without receiving any benefit from the company. They are called as creditor. In future we need to make payment to creditor or the supplier. So there also comes under personal account. And the last one is a bank. So nowadays banker play a very important role on behalf of the company. Banker making payment to supplier and banker receive amount from the customer on behalf of the company. So bank also artificial person which comes under personal account. Just see the rule. Personal account rule is debit the receiver, credit the giver. So according to this rule, you can easily identify the particular transaction is debit or credit with the help of this rule. And the third one is nominal account. What is the nominal account rule? Debit all expenses and losses, credit all incomes and gains. Just refer the profit and loss account. So in profit and loss account, we used to record all the expenses. All indirect expenses will be recorded on the debit side of profit and loss account. All incomes and gains will be recorded on the credit side of profit and loss account. In the same way, in nominal account, all the expenses and losses which comes under nominal account. For example, salary, rent paid, electricity charges, discount allowed, bad debts, all these things are expenses and losses which comes under nominal account. In the same way, all incomes and gains. Incomes and gains means rent received, discount received, commission received. So all these things are comes under incomes and gains. All expenses and losses, incomes and gains which comes under nominal account. So what is the nominal account rule? Debit all expenses and losses. If it is expense means debit the transaction. If it is an income means just credit the transaction. So according to the nominal account rule, you can easily identify the particular transaction is a debit or credit. So in order to make journal entry, you need to have thorough knowledge of the three golden rules. So what is real account? what is personal account and what is nominal account. You need to have an idea to identify the particular item is belong to real account or personal account or nominal account. Then simply apply the rule. With the help of this, you can easily make journal entry. Let us see the journal entry for 24 transactions. See this problem. Journalize the following transaction. 2015 April from 1st to 24th. See the first transaction. Alice started business with 1 lakh. I told you no. Just refer the 4 steps. Identify the 2 accounts. So what are the 2 accounts involved in this transaction? Alice started business with 1 lakh. See, 1 lakh rupees cash invested by Alice. Alice, she is a proprietor. She invested 1 lakh rupees for her own business. Okay, so identify the 2 accounts. First account is cash. She invested cash rupees 1 lakh and this amount is a capital for the business. Whose capital? Alice capital. Alice capital. See, the first step is identify the 2 accounts. In this transaction, 2 accounts are involved. One is Alice capital and cash. Alice invested amount as capital in the form of cash. Okay. Now, the second step is the identified account should be classified as to real account, personal account or nominal account. So now you have identified the 2 accounts. Now you need to identify, classify the particular account is belong to real account or personal account or nominal account. In the same way, this account is belong to real account or personal account or nominal account. Cash, I told you no. Just refer the golden rules. Real account. So real account means in the form of asset. Asset may be in the form of cash or goods. So cash is a real account, no? So now you have identified this account. So cash is a real account. Okay. Alice capital. Capital means she is a proprietor. So she is a person, no? So personal account. Owner's capital is a personal account. So this is a personal account. Now the second step is over. First one is identify the 2 accounts. Cash account and Alice capital, and second one, the identified account should be classified as real or personal or nominal. So cash is a real account, Alice capital is a personal account. And what is the third step? Find out the rules of debit and credit. Okay, what is a real account rule? Debit what comes in, credit what goes out. See, business is separate entity, owner is separate entity. Alice, she is a proprietor, but she is separate, business is separate. See, when she invests amount as a capital into the business, for the business point of view, from the business point of view, cash comes in or cash goes out. When Alice contribute capital, cash comes in. So what is the rule of real account? Debit what comes in, cash comes in, no? So this account should be debited. Okay, and just see the second one, Alice capital. So Alice, she is a receiver or giver? She is a giver. What is the personal account rule? Debit the receiver, credit the giver. Alice, she is a giver. She contribute amount into the business, no? From business point of view, she is a giver. So just credit Alice capital account. So entry for this transaction is cash account data to Alice capital account. Just write this transaction. So date 2015 April 1st. So Alice started business with 1 lakh rupees. So she invested capital in the form of cash, no? So when she invests amount, what comes in? Cash comes in. So cash account data to Alice capital account. Ledger folio means after making the journal, you need to transfer or you need to post the each and every item in ledger. So you can refer the ledger number, page number in this column, but initially you need not write anything. After making the journal entry only, we used to post the transaction into ledger. In that time you can write the page number or reference number for each and every transaction. So how much amount? 1 lakh rupees. And after making the journal entry, you need to write narration. Narration means a brief description about the transaction. So while you write the narration, you have to start with for or being. But nowadays it is not necessary to start with for or being. Simply you can write the details of transaction. Alice started business. That's all. Okay, so first transaction is over. Now go to the second transaction. Received cash from Samson. First identify the two transactions or two accounts. Received cash. Received cash means cash. First account is cash from Samson. So Samson, he is a person, no? So second account is Samson account. So now you have identified two accounts. One is cash and second one is Samson. When you receive cash from Samson, what comes in? Cash comes in. So cash is a real account. No, real account rule is debit what comes in. When you receive cash, cash comes in. So enter cash debit side. Cash account data. To automatically you can set the second one. Samson. Samson account. See, received cash from Samson. So your cash, when you receive cash from Samson, cash comes in. Real account rule is debit what comes in. So you are debited. And Samson is a personal account. Personal account rule is debit the receiver, credit the giver. Here you have received cash from Samson. Okay, according to this transaction, Samson is a giver. So credit the giver. How much amount? 25,000.
And you have to write the narration.
Received cash from Samson. Then third transaction. What is the third transaction? Paid cash to Thomas. The previous transaction is received cash from Samson. Here paid cash to Thomas. See, when you pay cash to Thomas, cash goes out. So just write cash credit side to cash. So automatically debit will be Thomas. Thomas account. Data to cash account. See, paid cash to Thomas. No, when you pay cash to Thomas, Thomas is a personal account. Personal account rule is debit the receiver. When you pay cash to Thomas, Thomas receive cash from the company. Okay, from the business. So debit Thomas account. When you pay cash to Thomas, cash goes out from the business. So real account rule is debit what comes in, credit what goes out. So when you pay cash, cash goes out. How much? 37,000. So both debit must be equal to credit. Then narration. Paid cash to Thomas. Then fourth transaction. Bought goods for cash. See, bought goods means purchase. Here they didn't mention the name of the goods. Okay, so simply you can write purchase account. See, bought goods for cash. So you can purchase any item in the form of either cash or credit basis. So when you receive or when you purchase any item on the basis of cash, you just simply write purchase account data to cash because it's a cash purchase. So in case of credit purchase, instead of cash, you have to mention the name of the person, the name of the supplier from whom you have purchased the particular item. So instead of cash, you can write the name of the person. But here, purchase goods or bought goods for cash, no, it's a cash purchase. So simply write the transaction purchase account data to cash because it is a cash transaction. Okay, when you purchase goods, what comes in? Goods comes in, no. But they didn't mention the name of the goods, so you have to write purchase. So purchase account data, purchase is a real account because all assets, cash and goods are real account. So when you purchase any goods, what comes in? Goods comes in. So purchase account data to cash account, both are real account. Real account rule is debit what comes in, goods comes in, credit what goes out, cash goes out. 80,000. Being purchased goods for cash. Then fifth transaction, purchased goods by check. So this is also a cash transaction, but instead of cash you have issued a check. Purchase goods by check, no, on behalf of the company, the banker will make payment to your supplier. Okay, so instead of cash you have to write bank. Purchase goods by check, no, just write the transaction. Purchase account data to, instead of cash you have to write bank. Why? Because you have issued a check. Okay, so purchase, when you purchase any item, what comes in? Goods comes in. Purchase is a real account, no. Debit what comes in? Purchase goods. Purchase account data to bank. Bank is an artificial person. So what is the personal account rule? Debit the receiver, credit the giver. On behalf of the company, banker will make payment to your supplier. So to bank, banker is a giver. Debit the receiver, credit the giver. Banker is a giver in this transaction. 20,000. Purchased goods by, just refer the previous transaction. Here purchased goods for cash, you have given the cash, no. So purchase account data to cash. In this transaction, purchase goods by issue of check. So here you need not write cash because you have issued check on behalf of the company. Banker will make the payment, no. Show bank also. So purchase account data to bank. Then next transaction, purchase furniture for rupees 10,000. Here the same transaction only. Bought goods means they didn't mention the item, so you have written purchase. But in this transaction they have clearly mentioned the item, purchase furniture. So you need not write purchase, you can write furniture account. Furniture account data to cash. You have issued cash, no. How much? Narration being furniture purchased. Seventh one, bought machinery from John. See, in this transaction they have mentioned the name of the person from whom you have purchased the item. Bought machinery from John means if you find any name of the supplier means it is a credit transaction, that is credit purchase. Machinery purchase from John on credit basis. If the name is not given means it will be a cash purchase, but they have clearly mentioned the name of the person, no, so it is a credit transaction. So instead of cash you have to write the name of the person from whom you have purchased the machinery. So what is the entry for this transaction? Machinery account data to John account, because when you purchase machinery, what comes in? Machinery comes in. Machinery account data to John. John account. See, machinery is a real account. John is a personal account. So what is a real account rule? Debit what comes in. When you purchase machinery, what comes in? Machinery comes in. John is a personal account. Personal account rule is debit the receiver, credit the giver. Here you have written credit side. So credit the giver because you have bought machinery from John. Okay, how much? 75,000. Purchased Missionary from John. Then next transaction, cash sales. See, purchase and sales can be two forms. One is a cash basis, another one is credit basis. Purchase and sales can be two bases. One is cash basis, another one is credit basis. Here, cash sales means sold goods to customer on cash basis. So, what is the entry for this transaction? When you sell something, what comes in? Cash comes in. Cash account data to sales. See, both cash and sales are real account. What is the real account rule? Debit what comes in. When you sell something, what comes in? Cash comes in. So, debit cash. What goes out? Goods goes out, no, to sales. So, cash what comes in? Cash comes in. Sales goes out. So, how much? 90,000. Just write the narration. Cash sales. Then next one. Sold goods to Joshua on credit. I told you, no, you can buy or you can sell goods in the form of cash basis or credit basis. If in case of cash transaction means you have to write cash. If in case of credit transaction means instead of cash, you need to mention the name of the person from whom you bought to whom you sold. Here, sold goods to Joshua on credit. Just refer the previous transaction, cash sales. What is the entry for this transaction? Cash account data to sales. See, it is a cash basis. Now, look at this transaction, sold goods to Joshua on credit. So, this is a credit basis. So, if it is cash basis means cash account data to sales. If it is credit basis means you need not write cash. Instead of cash, you have to write the name of the person to whom you sold the goods that you have to mention. See, what is the entry for this transaction? Sold goods to Joshua. Joshua account data to Joshua account data to sales. Okay, in the previous transaction, cash sales, no, cash account data to sales. This is a credit sales. So, instead of cash, you have to write the name of the person to whom you sold. So, Joshua account data to sales account. How much? 1 lakh rupees. Okay, narration. Sold goods. Goods to Joshua on credit basis. Okay, see, look at the next transaction. Purchase goods from James on credit. They have given the name of the person from whom you have purchased the goods. Okay, so for cash purchase, what is the entry? Purchase account data to cash. But this is credit basis, no? Instead of cash, you have to write the name of the person from whom you have purchased the goods. So, entry for this transaction is purchase account data to from whom? James. James account. How much? 1,50,000. Okay, instead of cash, you have to write the name of the person from whom you purchased the goods. Okay, so what is the narration? Purchased goods. Purchased goods from James. Next transaction. Returned goods from Joshua. Okay, you have returned goods from Joshua. Just refer the previous transaction. In the 9th transaction, sold goods to Joshua. You have sold some item to Joshua, no? Now, Joshua returned some goods to you. So, what is the transaction? It is a sales return. You have sold goods to Joshua. Now, you have returned goods from Joshua. It is a sales return. So, sales is credit, no? When you receive any returns from your customer, what comes in? Goods comes in the form of sales return. So, just write sales return under debit side. Sales return account data to from whom? From Joshua. Joshua account. How much? 5,000. See, sales always credit, because when you sell something, goods goes out, no? So sales is always credit. But when sales return, when you receive any return from your customer, it will be debited. See, in this transaction, sales return is debited because you are receiving some goods from Joshua. So it's a real account, no? Sales and sales return are real account. So real account rule is debit what comes in. Sales return comes in debit side. Joshua is a personal account. Personal account rule is debit the receiver, credit the giver. You are receiving from Joshua, no? So according to this transaction, Joshua is a giver. So credit Joshua account. Sales return. Then next transaction. Goods returned to James. See this transaction, goods return, the previous transaction return goods from Joshua. You are receiving goods, sales return from Joshua, but in this transaction goods return to James. You are returning goods to James. So what does it mean? Just refer the previous transaction, 10th one. Purchase goods from James. You have bought some goods from James. Now you are returning some goods to James. So what is this? Say purchase return. The previous transaction is sales return. This transaction is purchase return. You are returning goods to James. So this is denotes purchase returns. Entry for this transaction is James account data to purchase return. See the 10th transaction. You have bought some goods from James. No, entry for this transaction is purchase account data to James. Now you are returning some item, some defective item to James. No, just reverse entry. James, here when you return any item to James, James is a receiver. Receiver means James means personal account. Personal account rule is debit the receiver. When you return some item, who is the receiver? James is a receiver. So debit the receiver. When you return something, what goes out? Goods goes out. Purchase return goes out. So purchase return is a real account. Real account rule is debit what comes in, credit what goes out. So you're returning, no, goes out. So purchase return is a credit side. How much amount? 7,000. Look at the next transaction. Paid salaries, 6,000. So paid salary. Salary is an expense for the company or for the business. When you pay some expense, when you pay salary to your employee, it is an expense for the business. So expense means nominal account. What is a nominal account rule? Debit all expenses and losses. So salary is an expense, no? So debit. Salaries account data to cash. You are paying salary in the form of cash, no? So when you pay salary, what goes out? Cash goes out from the company. Okay, so cash is a real account. Real account rule is debit what comes in, credit what goes out. So it goes out, no? So credit. How much? 6,000. The next transaction. Rent paid by check. Rent also it's an expense, but you are paid rent in the form of check. So you need not write cash. Instead of cash, you have to write a bank because you have issued check. Okay. So what is the entry? Rent account data. See here you have to write the narration. Salaries paid. Rent account data to bank. Rent is an expense, no? Nominal account rule is debit all expense. So rent is an expense, no? So debit side. Bank is an artificial person. So personal account rule is debit the receiver, credit the giver. On behalf of the company, banker making payment to the landlord. So rent account data to bank. Banker is a giver according to this transaction. How much? 5,000. Narration being rent paid by check. Then 15th, commission received. See here, you are receiving commission. Okay, when you receive commission in the form of cash, what comes in? Cash comes in. So cash account data to commission. See, commission is an income. Income means it's a nominal account. Nominal account rule is debit all expenses and losses, credit all incomes and gains. So commission is an income, no? Here you have credited the commission in this transaction. So commission account credited. When you receive commission in the form of cash, what comes in? Cash comes in. So real account rule is debit what comes in, cash comes in. Nominal account rule is credit all incomes and gains. 5,000. Narration being commission received. Then next transaction. Alice withdrew for personal use. See, who is Alice? Alice, she is a proprietor. So proprietor withdraws some amount from business for her personal use. So any amount withdraw from business, it's for personal use, it is called as drawings. So drawings means it can be in the form of cash or in the form of check or in the form of goods. If it is in the form of cash means entry for the transaction is drawings account data to cash. See, Alice withdrew for personal use 20,000 rupees, no? So this is she withdraws some amount from business for her personal purpose. So drawings. So drawing is a personal account. So personal account rule is debit the receiver. So Alice drawings. Alice withdraw amount from business, no? So debit drawing account and to cash. Because when you withdraw any amount from business, cash goes out from the business. So real account rule is debit what comes in, credit what goes out. So it goes out, no? So credit cash account. How much? 20,000. If in case of check means drawing account data to bank. If in case of goods taken from the business for personal purpose means drawing account data to purchase account. When you take any item or any goods from business, it will decrease purchase account. So purchase is always debit side, no? So when you take away, when the proprietor takes any articles or any item or any goods from the business for their personal purpose means which will decrease the purchase account. So drawing account data to purchase account. But according to this transaction, Alice withdraw money from the business. So cash. Drawings account data to cash account. Alice withdrew for personal use. Okay, next transaction. Drew cash from bank for office use. Office use means it's not a drawing. Personal use means it's a drawing. Office use means for official purpose. She withdraw cash from bank. So when you withdraw cash from bank for office use, what comes in? Cash comes in. Cash account data to bank. Because you are withdrawing amount from bank, no. So when you withdraw amount from bank for official purpose, what comes in? Cash comes in. So real account rule is debit what comes in, cash comes in. Who is the giver? Banker is the giver. So to bank. Personal account rule is debit the receiver, credit the giver. Banker is giver, no. So just credit bank account. How much? 5,000. Narration. Withdrew cash from bank for official purpose. Then next transaction. Opened a current account with Universal Bank. See, when you open any account or generally current account is applicable to any business. A business can open only current account for day-to-day transaction. So open a current account with the Universal Bank. When you open an account, what goes out? Cash goes out. Who is the receiver? Universal banker will receive the amount from you, no? So debit the receiver. What is the entry for this transaction? Universal bank account data to cash, because when you deposit any amount into the bank, cash goes out. So how much? 10,000 rupees. So narration. Open a current account with Universal Bank. Next transaction. Received a check from Celsia. See, on behalf of the company, banker will make all payments and banker will receive amount from our customer. Okay, so when you receive any check from any customer, treat it as cash. Okay, so received a check from Celsia, no, treat it as cash received. So what is the entry for this transaction? Cash account data to, from whom you have received a check? From Celsia to Celsia account. See, when you receive check, treat it as a cash. So when you receive cash, what is the entry? What comes in? Cash comes in. Real account rule is debit what comes in? Cash comes in. Personal account. Celsia is a person. No. What is the personal account rule? Debit the receiver, credit the giver. You have received a check from, or you have received cash from Celsia. So here Celsia is a giver. So giver is credited to Celsia account. How much? 20,000. Received a check from Celsia. Then next transaction. Check received from Andrea. So what is the entry for this transaction? When you receive any check from any person, treat it as cash received. So entry for this transaction is cash account data to Andrea account. But one more information is given in this transaction. The check is immediately banked. Banked means the check is immediately deposited into the bank. So when you deposit check into the bank, who will be the receiver? Banker will be the receiver. So instead of cash, you have to write bank account. So what is the entry for this transaction? Check received from Andrea and immediately banked. No, banker is the receiver. Who is the giver? The check is given by the Andrea. So entry for this transaction is bank account data to Andrea. Andrea account 30,000. See, both are personal account. Personal account rule is debit the receiver. When you deposit the check into the bank, who will be the receiver? Banker will be the receiver. No, bank account data. Who is the giver? Andrea is the giver. The check is given by Andrea. Personal account rule is debit the receiver, credit the giver. Check received from Andrea and deposited into bank. Next transaction. Received cash 24,700 from Jonas in full settlement of his account of rupees 25,000. See, you have received cash, okay, 24,700 from Jonas. So what is the entry for this transaction? You have received cash. No, cash comes in from whom? From Jonas. So what comes in? Cash comes in. No. So real account rule is debit what comes in? Cash comes in. So debit. Cash account data. From whom you have received cash? From Jonas. So to Jonas account. See, cash is a real account. Real account rule is debit what comes in. Cash comes in, debit. Jonas is a personal account. Personal account rule is debit the receiver, credit the giver. So he is a giver. From Jonas you have received. So according to this transaction, Jonas, he is a giver. So credit Jonas account. So how much amount you are supposed to receive from Jonas? 25,000. See, just look at the transaction. Received cash 24,700 from Jonas in full settlement of his account. So hereafter you are not going to receive any amount from Jonas. So Jonas is settled entire amount. Full settlement is over. How much amount? 25,000. So what is the difference between these two? 300 rupees difference is there, no? So that 300 rupees is a discount. So instead of 25,000 you have received only 24,700. The difference 300 is a discount. You are allowed discount to journals. So when you allow any discount to your customer, it is a income or expense. It is a expense or loss. Okay. So discount allowed. You are allowed discount, no? So just debit. So discount means discount allows a nominal account. Nominal account rule is debit all expenses and losses. When you allow discount to your customer, it is a loss or it is an expense. Okay. So debit the expense. Discount allowed will be debited. So instead of 25,000 you have received only 24,700. The difference between these two is called 300 rupees. No, it is called as discount. So discount debit. Why? Because it is an expense. Narration. Received cash from Jonas and allowed discount to Jonas. Okay, then next transaction. Paid cash to Jane 14,500 in full settlement of her account of rupees 15,000. In this transaction, you have paid cash to Jane. When you pay cash, what goes out? Cash goes out. So, real account rule is debit what comes in, credit what goes out. Just credit cash account to cash account. So, how much amount you have paid? 14,500. So, credit 14,500. To whom you have paid? Paid cash to Jane. So Jane is a receiver or giver? Receiver. So receiver means Jane is a personal account. No, personal account rule is debit the receiver. Just debit. Jane account data. How much amount you are supposed to pay? 15,000. But you have paid only 14,500. What is the difference? 500 difference is credit. Credit you have found 500 rupees difference, no? Just write to discount received. See, when you allow discount, it is a loss for you or it is an expense. So, nominal account rule is debit all expenses and losses. When you receive any discount, it is an income. See, instead of 15,000, you have paid only 14,500. Full settlement is over. Hereafter, you are not going to pay any amount to Jane. So, that 500 rupees is a discount you have received. Jane allowed discount to you. You have received discount from Jane. So, it is an income for the business. So, all incomes and gains will be credited. So, discount received will be credit. Narration being cash paid to Jane and discount received. Next transaction, Martin, who liable to pay us 20,000, is declared insolvent. Insolvent means he is not able to pay the entire amount. So it is called as insolvency. See, Martin, who liable to pay us 20,000, is declared insolvent and 12,000 received from him. So you have received 12,000 instead of 20,000. You have received only 12,000. What is the difference between these two amounts? 8,000. That 8,000 is not a discount. Martin is a insolvent. So insolvent means you cannot recover the amount from Martin. That amount is called as bad debts. Bad debts means irrecoverable. You cannot recover the amount from the particular customer is called bad debts. So entry for this transaction is cash account data, because you have received cash. No, real account rule is debit what comes in. Cash comes in. How much? 12,000 you have received. From whom? From Martin. So to Martin account. How much amount you are supposed to receive? 20,000 rupees. No, but you have received only 12,000 rupees. What is the difference between these two? 8,000. So 8,000 is not a discount, but it is a bad debts. Bad debts means irrecoverable amount from Martin because he is a insolvent person. Insolvent means he is not capable, he is not able to pay the amount. So it's called as insolvent. So Martin, who liable to pay us rupees 20,000, is declared insolvent and you have received 12,000 from him. So 12,000 received instead of 20 and 8,000 is bad debts. Bad debts account also debit. So bad debts means it is a loss, no? So nominal account rule is debit all expenses and losses. So it's a loss, no? So debit 8,000. Cash received from Martin and bad debts rupees 8,000. Okay, you have written the narration. Then last transaction, received cash for a bad debts return of last year. Okay, this is the bad debts which is return of last year. This transaction is different, this transaction is different. This bad debt is belong to last year. Now you have received, it may happen, sometimes it may happen. You may receive some amount which is already written off as bad debts. So in the previous year you have made the entry, cash account data, bad debts account data to somebody else, the customer name. You have written written off bad debts in the last year, but this year you have received amount of rupees 7,500. So entry for this transaction is the bad debts is recovered, no. So you have received cash. So what is the entry for this? You have received cash, cash comes in. Cash account data to bad debts recovered account. Okay, so last year you have written off. Last year you have entered this transaction in debit side. Why? Because bad debt, it's a permanent loss. So this is recorded in the debit side. But this year you have recovered the amount which is already written off. So when you receive any bad debts recovered, it will be credited. Why? Because it is an income. You have received the bad debts, no. So what comes in? Cash comes in. Bad debts recovered is an income, no. So enter this amount under credit side. How much amount? 7,500. Narration: being received cash for a bad debt return of last year, 7,500. In this video I have explained 24 journal entries. So in order to make journal entry, you need to have thorough knowledge of 3 golden rules, that is real account, nominal account and personal account, and you have to follow the 4 necessary steps. These are the 4 steps which is very essential for each and every transaction. So first thing is you need to identify the 2 accounts, that is a debit account and credit account. The identified account should be classified as real or personal or nominal account, and find out the rules. What is the rule of real account, personal account and nominal account, and according to that identify which account is to be debited and which account is to be credited. So with the help of the 4 steps, you can able to make journal entry for any transaction. Thank you.